Okay. Good morning, everyone, and welcome to today's session. You're welcome once again. Trying to remember your name, sir. Josiah. You're welcome, Josiah. Okay, so for those of you who were around yesterday, we discussed, myself and my team, we discussed what trends are. We discussed the underlying assets, a typical forex broker versus deriv. We discussed the types of trends that we have, how trends form, how trends end. We discussed change of character, break of structure, and retest. I'm sure you were given assignments to identify this on your chart. If you were, please let me know. Were you given assignments to identify these concepts on your chart? If you were, please let me know. Please let me know. So today we'll be discussing in detail the ATM cash flow system, the ATM cash flow system. And what we do with the ATM cash flow system is we've decided to create or to use indicators to identify these different concepts instead of just using our naked eyes. So by now, everyone should be able to tell what an uptrend is. You should be able to identify the higher highs and the higher lows. You should be able to identify the lower highs and the lower lows in a downtrend. You should be able to identify the support and resistance. I need your feedback to be sure that we're all on the same page. Mike, please come. Help me minimize this so I can see, annotate all those other things. Thank you. And comments and all. So, Josiah, can you identify a basic trend now? An uptrend, a downtrend? Okay. Do you understand what a break of structure is, what a change of character is, what a retest is? Okay, so we'll just do a little recap. But those online, can you identify what an uptrend is? So let me just do a recap for those of you who may not necessarily have been here. So an uptrend is made up of higher highs and what? Higher lows. In an uptrend, everything goes higher. And a downtrend is made of lower highs. Every high that forms is lower than the previous high. And every low that forms is lower than the previous low. I hope that makes sense so far. We also discussed what a change of character is. Change of character. Change of character. Now, as the name implies, is when something's character changes. In an uptrend, what do we expect a low to produce? This low, what is it supposed to produce in an uptrend? A higher high, yes or no? And what is this higher high supposed to produce? A higher low. And what is the higher low supposed to produce? Another, which produces another higher low. So when you now see a higher low that produces a higher high, is following character, yes or no? And they are all breaking structure to the upside, yes or no? They are breaking resistance to the upside. They are breaking structure to the upside. If you now see a higher high produce a lower low, is that normal? A higher high is supposed to produce a higher low. But if a higher high produces a low that is lower than the previous low. What has happened to the character of that price action? It has changed. Now, a lower low, what is a lower low supposed to produce? A lower low is supposed to produce a lower high. Everything lower should produce everything lower if it's a downtrend. And in an uptrend, everything higher should produce something that is also higher. When something lower produces when a lower low produces a higher high, that is a change of character. And it tells us that the trend may be ending because the trend is bending. So look at this now. Is it following character now? What has happened now? This is a low. This is a high. Is this high higher than this high? This previous high here. Is this high here higher than this high? No. What has happened? Character. Yes or no? Thank you. So anytime you see a change of character, it's for you to pause. Because now this is a lower high. If this lower high now produces a lower low, is that in line with character? Yes, because a lower high has produced a lower low. And this has broken structure to the downside. So what we usually have is, first we have a change of character where a lower high which is supposed to produce a lower low now produces a what? Higher high. And a higher high which is supposed to produce a higher low now produces a what? Lower. A higher high now produces a lower low, right? That is a change of character. And immediately after change of character, what do we expect? A break of structure. This is what break of structure looks like. If it's to the upside or if it's to the downside. And then after the break of structure, what do you expect? A retest for price to continue in the direction of the break of structure. So what we're doing today is we're going to be looking at indicators and how these indicators show us what is happening on the charts and what is happening with price action. So for those of you who may have gotten the emails and installed the indicators on your chart, you should have something that looks like this. You should have something that looks like this. How many of you have something that looks like this on your charts? You should have something that looks like this. CJ, lest I forget, let's change those templates to the pink and yes, and then send it in the email. Please tell Mike. So you should have something that looks like this. And what this simply does is it shows us what is happening on the charts and shows us the direction very clearly. The first indicator that we have here is the TMA band. The TMA band, which is simply an indicator. The name is different here, rebound arrows, but it is the TMA band. And what does it do? It simply shows us the curve of price. So you have something like this. This is price moving inside it. So it serves like some sort of boundary. When price pierces beyond it, like wrestling, when they throw someone to the side of the ring, we expect that person to rebound back. So when price pierces above or below the rebound arrow, what do we expect it to do? To rebound back. And what do we use it to do? The slope of the rebound arrow tells us the direction of price. So if this is sloping up this way and price is doing this, please, what direction is this? What type of trend is this? Uptrend. If it starts curving to the side and price starts doing like this, please, what direction is this? Sideways. Yes or no? Then if it does this and then starts going back up, please, what direction is this? Uptrend. So this is an uptrend. This is a sideways trend because it has equal highs and lows. And this is an uptrend as price resumes. Yes or no? So that's what we use the TMA band to measure the direction of the trend. So the rebound arrows shows us the direction of the trend. Another thing about the rebound arrow, you notice it has an upper boundary and it has a lower boundary and it has a middle line that changes color. It has a middle line that changes color from blue to red. When it is blue, it's an uptrend. When it is red, it's a downtrend. Let's look at it again and see. If I zoom in here, can you see the middle line? It's changing from blue to red, okay? All right, so now we're going to look at the indicators one by one. When I click on the indicator list, you can see it there. To do that, just place your mouse anywhere inside the chart. Right click, you can do this with me. Place your mouse, your cursor anywhere inside the chart. Right click on it, then click on indicator list. Indicator list. If you right click on indicator list, you should be seeing what I'm seeing on my screen now. You should be seeing the rebound arrows alert. So there are 2 rebound arrows alert and 2 stochastic oscillators. You can delete the moving average. It's not really important to us. You can click, just click on it and click on delete. Okay. Now, what I want you to observe is the rebound arrow. Click on the first one here. Left click on it 2 times. And you will see the settings. You see the period. It should be set to period 12. Are you seeing that? It should be set to period 12. Can you see that? Okay. Now, if you click on the one below and you double click on it, this one is set to period 60. It's the same indicator, but we used it twice with different settings. When you set it to period 12, you're asking it to get us the average of price in the last 12 candles. When you set it to period 60, you're asking us to find the average of price in the last 60 candles. You'll notice what I did with the indicators is the same indicators, but we put them twice. One on a higher period setting and the other on a lower period setting. Why? We want to see the rate of change. All right? The rate of change. So what you will do now is I want to separate the 2 sets of indicators. You can see now that we have it separated. So what you will do now is on the rebound arrows alert, you take note of the oscillator 12, the rebound arrows 12, you take note of that, and then delete the one that is 60. So that's the one below. That's the one below. Let me show you what I mean. When we come to the templates, click on indicator list, click on moving average, delete that. Click on rebound arrows alert. This is 12. So we are keeping that. The one below, click on it, is 60. Guess what we're doing to that? We're deleting it. You delete the one that is 60. Then you come to the stochastic. You come to the stochastic also, the one below. One of them is period 50. The one other is period 122. Guess what we're going to do to the one that is 122? We delete it. So you should be left with rebound arrows alert, which is 12, and you should be left with stochastic oscillator, which is 50. Which is 50. If you have this and your chart is looking like this, let us know in the comments. What you're now going to do is you still come to that same cursor anywhere in the chart, right click on it, scroll down to templates, and then click on save template. Save template. So when you click on save template, you can now save that as March ATM 4 hour. March ATM 4H. ATM 4H. ATM 4H. 4 hour. Click on save. So if you come to your templates, you should have something like, look at it at the bottom there, March ATM 4 hour. Do we have that? Do we have that saved? So this should be saved as a template. This should be saved as a template. All right. Now what you now do is you can right click, go to templates, and load the original set of indicators that were there. So that's it now. It has gone back to the original ATM Cashflow TMA. Do you have that already in your template? Have you clicked on it? You can see it has changed back to the order. Yes. So now what are we going to do with this is the exact same thing. It's just that this time around, we come to indicator list. And guess what we are going to delete now? We delete moving average. And then we'll delete the rebound arrows 12, which is the first one. Delete it. Then when we come to stochastic oscillators, we delete the one that is 50. Delete it. Right? I hope all of us are following, even those of you online. If you are lost, please tell me so I can repeat it. Tell me so I can repeat it. So now we'll now come to rebound arrows. There's something I want us to do here. We come to rebound arrows. Come to colors. Someone is lost. Okay. Who is lost? Let's take you back. All right, Jayola, you're lost. Jayola, did you do the first task and did you save it as ATM 4 hour? Jayola, did you save it as ATM 4 hour? Please type an answer. No. Where were you? Were you watching or you had gone? Tell the truth, man. Internet issues. Oh, that one is beyond our control. You are using the web version since the app was not working. Well, sir, if you're using the web version, you won't have the custom indicators. You were supposed to install the MetaTrader 5 on your platform, on your laptop rather. You still can't log on. Okay. Number one, this should be done on a laptop. This training is on a laptop. MT5 seems different from yours. Yes, sir, you're not supposed to, Damian, you're not supposed to use the web version. You are supposed to use the MT5 version, which is why we said yesterday, you should check your mail, you should install the indicators. If you have any challenge, you should reach out in the Telegram group so that this morning, your app will be ready for usage. Having issues running it on my desktop. Does it not work on MacBook? It should work on MacBook, but this, I don't know because none of us use a MacBook, but it should work on MacBook. From the Deriv platform, you should be able to download MT5 for MacBook. I don't know if the indicators will work though on MacBook because these indicators were designed for MT5 for Windows. So I really don't know. I think I'm the first person using a MacBook on this training. So you may have to search for, so the way it appears, rebound arrows alert. You may have to look for rebound arrows alert for MacBook MT5. Okay, so go to the Deriv personal area, look for MT5 for MacBook and install it there. Okay, Jai, well, just listen to what we're doing and you may have to watch the videos again, but you can install this current, what I'm about to teach now, follow this one and do it. Isaac Oye, I still can't log on. If you can't log on, there are two issues. You didn't go to the personal area and open, you didn't open your Deriv on your personal area, or you didn't open an MT5 synthetic account when you were on your personal area. Or if you did that, then they should have sent you the login details to your email. And if they sent you the login details to your email, you're just supposed to copy and paste onto the Deriv platform that you installed, and you should be able to log on. If that still doesn't work, then you may need to contact the Deriv support to find out why you can't log on. But most of the time, is either you didn't open a synthetic account and you didn't get the correct login details, or you haven't installed it properly. The login details you got have not been installed properly. Okay? So, yes, let's see. I'm still confused about how to install the indicators. I don't have access to my academy, so I can't watch any video. Okay, we'll work on why she doesn't have access to the academy. But even in the email that was sent to you, there are attached videos that show how to install indicators on MT5. Abisola, did you watch those videos on how to install indicators on MT5? There are no videos like that on how to install. Oh, really? You removed all those other attachments. So how do they watch it? So, but she doesn't have the access. Why don't you have access, ma? Well, I'll have to proceed with the class. So between yesterday and today, before the class was when you were supposed to have confirmed that you installed the indicators and have the platform working. But it's not that hard. Have you installed the platform, Abisola? Ma, have you installed the platform? Have you installed the platform? The MT5 platform. Okay, fantastic. So, have you downloaded the indicators to your laptop? Have you downloaded the indicators to your laptop? Okay. If you just go on YouTube and just Google how to install MT5 indicators, you'll see many videos. Many videos. I don't know why you don't have access to the academy, but we'll resolve that. Okay, so Let's confirm that. Okay. So it's very simple. You just come to File, then you come to Open Data Folder. The data folder is a folder where all the data you need for MT5 is located. When you click on Open Data Folder, it will open the data folder. You can see the data folder here. It's opened it already. I don't know if you can see this. So once you open the data folder, you click on MQL5. Eh? Oh, okay, my data folder is not showing. Okay, I'll run that again. I'll run that again. They were only seeing the platform, Abby. Okay, so let me share the whole screen. The screen, right? The entire screen. Okay, sorry about that. So I was saying that you come to File, you come to Open Data Folder. It should open this data folder. I don't know if you can see this. Are you seeing this, ma? So it opened the data folder. Then you have MQL5. You click on MQL5. Under MQL5, you see indicators. Indicators. You click on that. So this is the folder where you want to copy your indicators to. So the indicators that you downloaded, if they're in the download folder, go there, select all of them, copy them, come to this MQL5 indicator folder and paste them. And all of them will be pasted here. Once they are pasted here, close your MT5 platform and open it again. So it will reload. When you open it this time, it will include those indicators. I hope this helps. Please try this and it will be very self-explanatory. There are videos of this thing I just said on YouTube. Have you done it? I need to be sure you've done it so that you can be carried along in the training. Not yet. Okay, let's try and do it. Go to your download folder where all the indicators are. Select them and copy them. Control C. Control A, Control C. Please do that. Please do that. Anyone who is unable to do this during the break or immediately after today's class, try as much as possible to watch the videos and install. For now, you have to just look at my own chart to see. So, have you copied? Have you pasted? Josiah, sir, has it been resolved? Yes. Okay, all right then. Okay. So let me continue. Although we need to have at least 1 or 2 persons online that have installed successfully. Is there anyone that has installed successfully so that we can continue with the training? Okay. Okay. All right. Okay. Yeah, the modifications, you had an internet issue, so I'll explain the modifications now to you. Okay? I'll explain the modifications. Okay. So, Abimbola, I want to wait for you so that you also will have installed. Have you done that, ma? If you're stuck, just tell us where. Come to File. First, go to your Downloads folder. All the indicators that you downloaded, click on all of them and press Ctrl C to copy. Then come to your MT5 platform, File, Open Data folder, click on MQL, click on indicators, right click, paste, boom, it's pasted there. Once it's pasted, you won't see it immediately. You need to close the MT5 platform and open it again. Then it will load them as it loads the platform this time around. All right, so can I move forward, please? Can I move forward, please? The good thing is you have access to, this training is being recorded, so you'll have access to it. And you can also join in next month's training, okay, and the month after that. All right, so that helps you to really understand. And if next month you can physically travel to the floor for the training, you can also physically come around and you'll do the training, because we want to make sure if you do it at least 2 times, you have an understanding of the training details. All right, so I think we can proceed. So Jayola, we said that your chart should be looking something like this now. So place your cursor anywhere in the chart, right click, click on indicator list, click on indicator list, delete moving average, rebound arrows that is set to period 12, leave it. The one below it, delete it. Stochastic oscillator that is set to period 50, leave it. The one below it, delete it. Your chart should look something like this. If your chart looks something like this with just the black line and the yellow line, come to templates and save it as ATM 4 hour. ATM 4 hour. That's the first modification. What did you press to open the properties? I said place your cursor anywhere on the chart, then right click. Then you will see, once you right click, this will pop up and you click on indicator list. When you click on indicator list, you see rebound arrows, you see alert. Properties of the rebound. Well, you have to click on it. When you click on it, then this comes out, then you click on properties. Okay? Nope, I didn't say delete the one with 12. Dayola, I didn't say delete the one with 12. Need to pay attention, sir. What I said is click indicator list, delete moving average, click on this. The one with 12, leave it, close it. Click on the one below. This one has 60. The one with 60, delete it. Same thing with stochastic. The one with 122, delete it. So have you done that now, sir? And if you're having internet issues, please let us know so we can proceed. A very simple instruction will be delete the ones under. Delete the rebound arrow that is under, delete. Delete the stochastic that is under, delete. You'll be fine. Then save it. When you close this, you now save it. Under templates, you click on save templates and ATM C4 hour, you save it. Save it. Once you have done that, come back to templates again and load the ATM cash flow, which shows you the original settings. When you do that, same thing we want to do. Come to indicator list, delete moving average. This time around, you delete the first rebound arrows and you delete the first stochastic, which is this one, delete, this one, delete. You should have something like this. A blue oscillator and this below. You are too fast, though. It's pretty straightforward, sir. The same thing you did that time, do it again. But this time around, under indicators, you are going to delete the ones that are on top. Save it as 4 hours. Are you saving the first template or are you doing the second one? Is it the black you are saving? Saving the first 4 hours. Save it as 4 hours, 4H or H4. Save it as H4. Then you save the other one to as CJ. Can you put the template in the Telegram group? Oh, there's Telegram here, ba? Okay. Okay. I'll save the template onto the desktop. Okay, so have we gotten this now? Okay. So those are the indicators right there, the templates right there in the. For the second one, it's the same thing we're doing, but instead of deleting the indicators on top, we're deleting moving average first, then rebound arrows. The first one, you delete that. Stochastic oscillator, you delete that. Okay? Now, those of you who have been unable to install your indicators, in the Zoom group right now, I put ATM 4 hours and ATM 15 minutes. You can just go and download the template onto your desktop. And when it's time to load it, just load it from your desktop. So just come here to template, come to load template. Then the templates you saved on your desktop, look at them, ATM 4H, ATM 15. You can click on them, it will load it for you, and you save it. Yes. Yes. That's what I'm saying. Just get it from there. Although I can just show that to you. So for the second one, just so this will be recorded so that those who are watching it will not be confused. So by now you should have saved your ATM 4 hour. It should look something like this. So if you now want to edit the other one, just come to ATM Cashflow, the original template, delete moving average, delete the first rebound arrows, delete the first stochastic. You should have something that looks like this. You can come to indicator list again, click on the rebound arrows, and you see common input colors. Common input colors. On this upper band, just double click on the writing and change it to pink. On the upper band, double click on that light sky blue and change it to pink, and click on OK. Click on close. You should have something like this. If you have something like this, save it, template, save template, and make it ATM 15, meaning it's on the 15 minutes time frame we use it. Your question, can't see your screen to compare. You should be able to see my screen. Let me share it again. Yep, you should be able to see the whole of my screen. I'm sharing the whole of my screen. My screen is there. Maybe it's internet that is lagging, but my screen is showing. Okay, my screen is showing. My screen is showing. My screen is showing. Okay. So we should have the two templates. And just to confirm that you have it, right click, template, ATM 15 minutes, 4 hours should look like this. Black, black with a yellow oscillator. Black, black with a yellow oscillator. Do we all have that? Some of you have gone totally quiet. Some of you have gone totally quiet. Okay, Edese, I'm seeing your screen. Okay. You change arrows to pink. How do you change arrows to pink, please? Let me show you that again. Watch my screen, please. Delete this. Delete the first one. Delete the first stochastic. Click on the rebound arrows. The color is showing light sky blue. I hope you're not trying to do as I'm just watch this. Inputs, then there's colors. On this light sky blue, click on it. It should become highlighted. Double click on it again. It should become editable. Delete the light sky blue and type pink. Then type enter, click on OK, click on close. This is the last time I'm saying this because you can get it from the templates on Telegram. And then save this to ATM 15. All right, that being done, I think we're ready to proceed with the rest of the training. So what you will notice is what we actually have as the template is simply ATM, the 4-hour template, superimposed on ATM, the 15-minute template. If you look at it carefully, so you can see the yellow stochastic and the blue stochastic. You can see the pink one and the black one, right? It's right there. It's right there. So I broke it apart to explain what each one does and how we measure each one and do multiple time frame analysis. All right, so we now know each of the indicators that we use, and I'll tell you what they measure. All right? So the checklist is on the 4-hour time frame. If you notice, if you look here, for some of you it's at this side, for some of you it's at the top, but you see something that has M1 meaning 1 minute, M5 meaning 5 minutes, M15 meaning 15 minutes, M30 meaning 30 minutes, H1 meaning 1 hour, H4 meaning 4 hours. Right? H4 meaning 4 hours. Okay. Now, how does the ATM cash flow method work? The first thing we do is we use this rebound arrow or TMA band, but it's called rebound arrow. Sometimes if I say TMA band, it's still rebound arrow I'm talking about. The reason why they call it rebound arrow is you can see the arrows for the rebound. So this indicator was called rebound arrow, but it's actually a TMA band that has arrows. So if you hear me say TMA band, it's the same thing I'm talking about. We use the TMA band to determine direction on the 4-hour. So step 1, load your 4-hour template on the 4-hour time frame. Make sure it's the 4-hour time frame. You can zoom in. Just make sure it's the 4-hour time frame. This is the 4-hour time frame here. The first question is the band sloping down or sloping up? With what we see here, what's the band doing? Sloping down. That's the first question. What direction is the 4-hour black TMA band sloping? Second question, what's the color of the middle line? Red. What direction is this? Downward. What's the 4-hour trend? Is it an uptrend or a downtrend? Downtrend. That's the first thing we establish. Establish 4-hour trend. You can either use your eye to establish it. If you are using your eye, someone is asking a question. All right, fantastic. If you are using your eye, it's very clear. Low, high, lower low, lower high, lower low, lower high, lower low, abi, lower high. But this lower high now produce a what? A low that is higher than the previous low, yes or no? So this is a what? Higher low. What do we call that? Change of character. That tells us that the trend may be ending, abi? But when he now did this, higher low now produce a what? Higher high, yes or no? Then this higher high now produce a what? Lower low. What do we call that? Change of character. Again, abi? Thank you. You see why sometimes we just use the TMA band? Because if it's the TMA band, we don't have to ask all these questions. You just look, where is the TMA band sloping? Down. What's the color of the middle line? Red. What's the 4-hour trend? Sell. I'll say take that again. Where is the middle line? Where is the TMA band sloping? What's the color of the middle line? Red. What trend is that? Now, if you notice something about the stochastic oscillator, that's the oscillator down here. When it gets to the top, at the same time, price hits the upper band of the TMA band. Usually what happens? Price starts coming down, yes or no? What happened here? Price is between 80 and 100, yes or no? Meaning it has been buying, but the buyers may be tired because now it is right at the top, the peak. So what do we likely expect? What happened here is at the outer band of the rebound arrows, yes or no? What showed up here? And then what now happened a little while later? Downward trend. Yes or no? Right now, price is here. Yes or no? Meaning the sellers may be tired. Abi? But is this one coming up? Has it started coming up? Is coming downwards. Yes or no? Is this color blue? So is there still space for the sellers to keep selling? Yes. It's a very simple question. What's the 4-hour trend? How do you know? Yeah. Thank you. And price came from 80 and it's going down. Yes or no? So who is in control of the market right now? So what are we supposed to be doing right now? Thank you. It doesn't matter. The stochastic follows. Yes, look at it here. Was it not at zero here? But what continued to happen? Did you not do as if it wanted to start coming up here? Did it as if it wanted to start coming up here? Yes or no? And it came up a little bit. But because this guy didn't curve fully, what now happened? And what now happened? It stayed inside there for a long time. Do you understand? So the first question you should ask yourself is, where is the 4-hour TMA or 4-hour rebound arrow pointing? What's the color of the middle line? That's where we start our analysis for ATM cash flow. Where is the 4-hour TMA band pointing, rebound arrow pointing, and what's the color of the middle line? So checklist number 1. On the 4-hour time frame, what's the direction of the slope? What's the direction of the middle line? What's the direction of the yellow stochastic? I'll take that again so you can jot this down. On the 4-hour time frame, what is the direction of the slope? The rebound arrow slope. What is the direction of the middle line? Where is the stochastic pointing towards? Where is it coming from? Does everybody understand this simple set of questions? The first question, checklist. On the 4-hour time frame, make sure it's 4-hour. As you can see, is on the 4-hour. 4-hour is highlighted. Where is the 4-hour TMA sloping to? What is the middle line? Where is the stochastic coming from? Where is it going to? This is helpful so far. Say this is helpful. So we can move on to the next set of questions in the analysis, in the checklist. Now, if you notice, you see something like this that look like period separators. They are called period separators, these dotted lines. And on the 4-hour, every period separator on the 4-hour time frame, remember this 4-hour, represents a week, 1 week of trading activities. 1 week of trading activities, every period separator. So this week, what has the trend been? Last week, what was the trend? The week before that, what was the trend? It was ranging, but to the downside. Yes or no? The week before that, what was it? Clear sell. Online community, does this make sense? Does this make sense? Now, mind you, in a downtrend, price still buys. Abi? Is this a buy here? From here to here is a buy. Is this not a buy? Is this also not a buy? So we expect pullbacks. But what's the overall trend? So are you seeing this is a buy pullback here? Yes or no? This is a buy pullback here? Yes or no? This is another buy pullback here? Yes or no? This is another buy pullback? Yes or no? Buy pullback, very long buy pullback. This is another buy pullback. But overall, what's the trend? Sell, 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 sell. The sellers made more money than the buyers. Is that statement true? So that is a downtrend doesn't mean buyers can't make money, but buyers have to be very careful because they are trading against the trend. So always establish the 4-hour trend before you take a trade. You can establish that it is a downtrend, you can establish that it is a sideways trend, or it is an uptrend. Is this understood so far? All right. So we use the 4-hour shorter settings. You know, this is the setting of 12 period and 50 stochastic. We use it on the longer time frame, the 4-hour time frame, where every candle represents 4 hours. So on the higher time frame, we use shorter, more sensitive settings of 12 and 50, 60, 50. Now, the second template we have saved is the 15 minutes, right? This is the 15 minutes. Now, what time frame do you think we use this on? I've already said the name. 15 minutes. So what time frame is it on currently? It's on 4 hours. So I'll change it to what? 15 minutes. Okay? And what do you expect to see on the 15 minutes? We want to ensure on the 15 minutes that the 4-hour trend is what we trade. So, same thing on 15 minutes. Stochastic, it should be coming from where? 80, 85, and should be pointing towards 15. Abi? Thank you. What should the middle line of this one be? Red. And where is the slope? Downwards. So throughout yesterday, what would we have been looking for? Sales. But now today, something interesting has happened. What has happened? Price is oversold, yes or no? Because it's below 15. And this slope is not as steep as this one, Abi. This one is like this one is like this. They are not as steep. What's that telling you possibly about the sellers? The sellers are tired. And if the sellers are tired, what can happen? Buy. So we won't be surprised if we see these guys start doing something like this to start buying, and then this will come out of here from 15. I will start targeting where? 85 or 100. So this is how we know that the trend is bending. Not ending, but bending. When the 15-minute time frame conflicts with the 4-hour time frame. When the 15-minute time frame conflicts with the 4-hour time frame. We are going somewhere. We are going somewhere. I will answer it. You are right. It's a valid question. So I only want to trade in the direction of the 4-hour trend. Why? I can catch more that way and it can go further that way. So based on this 4-hour now, can you see all the sell periods? So on this 4-hour now, the best and safest kinds of trades are what? Sell trades. But on the 15 minutes, price is already correcting the sells and is trying to look for what? Buys. How will I know when price has started buying? This guy will come out of 15 and start heading towards. This guy will change color and this will become blue. The middle line will become blue. And over time, this one will start sloping upwards. Does this make sense so far? So we use the ATM 15 minutes on the 15 minutes to determine where price is headed. To determine where price is headed. So 4 hour. Okay, so this is it on the 4 hour. The sales look as if they want to rest for a bit, and buyers want the buyers to come in and push the market up a bit. So everyone should have their 4 hour checklist by now. And the 4 hour checklist is pretty simple. Number one, what's the black TMA pointing? Where is it pointing? Up or down? Number two, what color is the middle line? Number three, so number one is the slope of the TMA rebound arrow. Number two is the color of the middle line. Number three is the stochastic oscillator. Where is it coming from? Is it coming from below 15, heading towards 85? Or is it coming from 85, heading down towards 15? All right. So now that this has been done, there are a few ground rules. We always trade in the direction of the higher time frame. So if we see any buy on the 15 minutes, if you see any buy signal on the 15 minutes, except you've been trading for a long time and you know VIX 75 like the back of your hand, don't take that buy. Why? Because it is against the 4 hour trend. The 4 hour trend is a sell. While the 15 minutes, the sellers are getting tired. Okay? All right. Does this make sense so far? So we should only be looking for sales. Why? Because the 4 hour is what? Selling. If you understand this checklist, please let us know that you understand it. So, sir, do you know what to do when you get to your chart? You open your chart, you open the 4 hours, you place the 4 hour indicator there, and you observe where the market is going. Is that right? Then, after you do that, you now open the 15 minutes, observe if it's confirming what the 4 hour is saying, or if it's negating it. And then you now trade that. It really is as simple as that. Thank you. Identify the higher time frame trend and look for the lower time frame to confirm that trend. Identify the higher time frame trend and look for the lower time frame to confirm that trend. I'll take that one last time. Identify the higher time frame trend and look for the lower time frame so that you can place your trades profitably. So who can read out to me? Yes, we always go with the higher time frame. If it's negating, you don't do anything. You stay out until both of them agree. If you enter without the lower time frame agreeing, Then anything you see, take it like that. Is it only 4 hours and 15 minutes? Yes, it is. In terms of trading every day, but in terms of knowing the overall long-term direction, you can do trend analysis on the daily. Let me show you what I mean. Okay. Now, if I want to determine the 4 hour trend so I know what to trade between now and the next 4 to 8 hours, I look at the 4 hour. But you can also want to know where the overall market is headed, and you do that by looking at the weekly and the monthly. And what are you looking for there? You want to see higher highs, sorry, lower highs and lower lows for sell, and higher highs and higher lows for buys. But typically, you may not be able to wait for 1 hour, sorry, for 1 week to get your trade. It's better to do it on the 4 hour. All right. So I hope this has answered the question of is it only 8 4 and M15 you should be concerned about? Okay. On the weekly, if I just want to analyze the weekly, eh? I should. Okay. Thank you. Okay. Now, if you do a simple analysis of the weekly time frame or the monthly time frame, what's the direction of the monthly for the last how many months? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I can never forget this because I think when we started these trainings, we kept saying that Big 75 is going down, and it has been a downtrend for close to a year now. Why? We do a simple market structure analysis. This is low, high. Yes or no? Higher high and what? And what? Sorry. Higher low and higher high. Which produces a what? Which produces a what? Which produces a what? Lower low. Already there's problem, yes or no? Because a higher high is supposed to produce what? But instead it produced what? What's that telling you? The trend is bending. Thank you. Then lower low went to produce a what? Higher high, yes. Yes or no? Because this high is higher than. But then we now see something interesting. Another change of character. Why do I say so? This is a higher high. Abi, what did it produce? Okay. And then what happened after I did that? So you can see that you can utilize this break of structure here, this change of character here. Does this make sense or is it not making sense? Online community, how do you know when the trend is ending? It forms higher highs and higher lows. Then it does change of character. Then it does break of structure. Then it does retest. What happened here? Oh, I'm labeling it wrongly. Sorry about that. Sorry about that. I'm coming. Sorry. So they are all sticking to character, each high producing a subsequent high. Then what now happened here? This higher low, what did it now produce? This low is lower than, yes or no? Immediately I saw a lower low, what does that tell me? Something is wrong. Mind you, this is monthly or the whole year, 2021. You know, you asked a specific question that is it just H4 and H15 if you look at? I said yes, but to know the overall direction, always be checking the monthly and the weekly. Of course, you don't need to do this every week. It was in the middle of last year that I started saying, even in my ATM group, they say I don't really talk much or whatever I get. I'm like, the honest truth is the direction has been determined for the year. Is going down. Immediately this happened, is going down. In maybe the next 2 years, we'll now take direction again and look for change of character on the monthly time frame and break of structure and retest on the monthly time frame. Do you understand? To just have an idea of what is happening overall. Then what now happens here? Came back here. At this point, is this not supposed to continue going up? This higher low, is it not supposed to produce what? Higher high. Instead, what did the higher low produce? Don't confuse yourselves. Higher low is supposed to produce a higher high. Instead, what did it produce? It produced a lower high. Let me run through that again. Look at this. Let's mark all the highs and the lows first. Abi? Low, high, low, high, low, high. Do you understand how I'm getting the lows and the highs? Or you don't understand? Low, high, low, high, low, high, low, high, low, high, low, high. Do we understand this so far? Understood? So at some point, what did we see here? This is a low here. And what should it produce? A high, yes or no? And this high now produce a low that is lower than this low. Why should a higher high produce a lower low? A higher high is supposed to produce a higher low, but produce a lower low. Then that lower low now produce a lower high, which now produce another lower low, which now produce another lower high. When you have lower low, lower high, lower low, lower high, what do we call that? Downtrend. So to have an understanding of why, so for example, any buys that you have been taking will not last so long. Why? Because the overall higher time frame trend is a sell. So does that answer your question? When trading ATM cash flow, we only trade the 4-hour and the 15-minute, but have an idea of what the overall time frame is saying overall. Look at this now. This is the weekly time frame. Since July 2022, what's the trend? Downward trend. But in that downward trend, isn't this a buy? Isn't this a buy? Isn't this a buy? Do you understand? But the overall trend is down. Have I answered your question, ma? Okay, fantastic. So let's go back to the, so I always keep my eye on higher time frame, especially when I enter a buy and I expect that buy to go very far. And instead of going very far, it just goes a short while and then I get stopped out. Then I know that is the highest time frame that is fighting me. Does that make sense? Okay. Whatever the case may be, whatever time frame you are trying to utilize, right? Know that we look at the 4-hour and the 15-minute as our higher time frame and our lower time frame, right? But even when you put these indicators on the weekly, what direction is the slope? What's the color of the middle line? Red. What's the trend on the weekly? Thank you. But we don't pay attention to weekly because that's a lot of information. But if you look at this too, what's the color of the slope? Oh, sorry, what's the direction of the slope? What's the color of the middle line? Thank you. But we start with the 4 hours. Does that make sense? Because we just want to trade for that week. For that day, but in the 4-hour period separator is a week. Each candle is 4 hours, but each period is 1 week. Do you understand? Okay. So identify the trend on the higher time frame. So we always put the black TMA on the higher time frame and the pink TMA on the lower time frame. You trade the direction of the higher time frame and you make entries on the lower time frame. So for us, our higher time frame is 4 hours and our lower time frame is 15 minutes. Does that make sense so far? Okay. Now, if this is the 4 hour and this is the 15 minutes, right? Where are all the places we could have had entries to sell? Anytime price is above 85 and the middle line is red and it is sloping downwards, we are prepared to take our sells. Okay? There is a slight problem here. What's the problem here? Stochastic is below 15. And we want to sell from 85 to 15 and buy from 15 to 85. If you sell at 15, where are you going to exit? At 0. Do you understand? So we prefer to sell at 85 and target 15. Now, we have established that the 4-hour time frame is a sell and the 15-minute time frame is a sell. How then do we make our entries? It's simple. You come down to the 1 minute, to the 1 minute, or to the 3 minutes. You come down to the 1 minute or to the 3 minutes, and you want to sell from 85 to where? 15. Can you see that on the 1 minute now? What was the color of the slope? Red. What was the arrow telling us to do? Sell. Where was the stochastic oscillator? Around. Thank you. Is there space for it to come down to 15? Would we have caught this move? Yes. Does that make sense? If price climbs all the way back up here now, is at 85, yes or no? Thank you. This guy will be somewhere around here, yes or no? If it now curves this way, and the middle line is red, and the rebound arrows are pointing down, and there is space to go from 85 to 15, meaning the oscillator is closer to 85 than it is to 15. What do? We sell, because the 15-minute time frame is what? And the 4-hour is what? Does that make sense? So let me run through all the rules again briefly. Determine the higher time frame direction. That's where we want to trade. Determine the higher time frame direction. That's where we want to trade. What's the higher time frame direction? The black TMA is sloping down. The red TMA is red and selling. And the last arrow we saw from here is saying everything should go down. Abi? So the 4-hour trend, the whole of this week, price has been going down. Then we confirm on the 15 minutes, yes or no. We have determined the direction on the 4 hours. We now want to confirm it on the 15 minutes. Let me zoom out a bit. On the 15 minutes. This is the 15 minutes here. This is the 15 minutes here. Can you see the 15 minutes? I've zoomed out for us to see. What was the slope here? Downward. What was the color of the middle line? Where was price coming from? And where was it pointing? Was there space for it to still come down? Thank you. So one could have caught this. Then when it got here, what did it start doing? Started going up, Abi. Then around here, where is price coming from? What's the middle line? Red. What's the arrow? Is there still space for it to come down? What we have done here, sell. Where is it now? So you may want to take something off the table, right? What do we expect price to do? If price comes upwards a bit, starts coming here, it gets towards here, what would that be? 85, yes or no? If it starts sloping downwards again, and you see arrows pointing down, and the middle line becomes red, and there's space to come down, what do we do? Because the 4-hour trend is what? Is selling. So we confirm on the 15 minutes the direction we have determined on the 4-hour. Does that make sense so far? Online community, does this make sense so far? Now, someone may ask me another question and say, what if the 4-hour trend is sideways? Meaning, what if the 4-hour trend is sideways? Meaning that, okay, like something here now. This thing that we are seeing here now. This is a sideways trend, yes or no? It was blue, it became red, it was blue, it became red. These are the places that will kill your trade. You'll just be getting stopped out, stopped out. So what if this was what we were seeing on the 4-hour, meaning the trend is sideways? Abi, let me show you a place where the trend was sideways for a while on the 4-hour. Even something like this. This was a bit of a sideways trend, yes or no? Because it was blue here, red, blue, Abi, and these highs are equal, yes or no? And these lows are equal. What's the sideways trend? Equal highs and equal lows. What we have done here, when the trend was sideways, between 8th of March to 18th of March. Abi? Because it will have been confusing, yes or no? Okay. Technically, you are supposed to stay out. Between the 8th of March and the 18th of March, price was not trending very well. You know, this is a trend trading system. Price was not trending very well. What will you have done? Is very simple. When the 4-hour trend is not clear, stay out. But this was 10 whole days, from 8th to 18th. How many people will have the self-control to stay out for 10 whole days? So there is a caveat, there is a little hack you can do. When the 4-hour is not showing you clear trends, use your 15 minutes as your higher time frame and your 1 minute or your 3 minutes as your lower time frame. What's our higher time frame normally on a good day in ATM cash flow? So we are trading in the direction of the 4-hour trend, yes or no? On a good day, we identify or determine trend on the 4-hour and trade it on the 15 minutes. So if the 4-hour trend is a buy, what trades are we looking for on 15 minutes? When we see sell signals, what do? Ignore. Thank you. But if it's ranging and we are impatient, We now decide to use our 15 minutes as our higher time frame. So we will now be trading the 15-minute direction when the 1 minute or the 2-minute time frame agree with it. Does that make sense? Determine direction on the higher time frame, confirm it on the lower time frame. What is our higher time frame normally? What is our lower time frame normally? But if 4 hours is ranging and we don't seem to have a clear direction, we'll now say, okay, 4 hours is going both up and down. What will I now use for my higher time frame? 15 minutes. What will I now use to confirm my higher time frame? 2 minutes or 1 minute or 3 minutes? Does this make sense? When 4 hours train is ranging, you can use your 15 minutes for your direction. So look at this now. This is a clear direction, yes or no? It's telling you to do what? Sell. So there is no range. But let's say this was moving sideways like this, right? Guess what I will do? I will now drop down to the 15 minutes using the black TMA, not the pink. Black is for determining direction. Pink is for confirming it. Abi? So I'll now check this on my 15 minutes. Do you understand? I'm now using the black, the faster one. Yes or no? Yes or no? Thank you. And what is it telling me? What's the slope? Thank you. What's the middle line? Is red. It was blue briefly here, but then it became red. Yes or no? Does that make sense? I'll now check for entries using the slower TMA band now. The slower one is the pink one. Yes or no? Thank you. So I'll now come here and check this on 1 minute. So what's the 15-minute direction right now? What's the 15-minute direction? Selling. Why? The black band is, and the middle line is, and there's space. Abi, it came from somewhere here down. Yes or no? I now confirm with this one. Perfectly. What's happening here? Thank you. What's the middle line? What's the arrow? Thank you. So, what happened here? Break of structure. Abi? Is it not break of structure? What's this here? Retest. Yes or no? Price is coming from 85 and there's still space. All I have done at this point. Thank you. And I'll capture it and write it all the way here. Does this make sense? Online community, does this make sense? So what is our preferred setting? Confirm direction on the 4 hour using the black TMA, the 12 TMA, Abi, period 12 TMA. Then, determine direction on the 4 hour, confirm on the 15 minutes, yes or no. But if the 4 hour starts to range, what do we now do? Determine direction on 15 minutes, confirm on the 1 minute or the 2 minutes. Does this make sense? If you cannot determine direction on the higher time frame, don't bother trading. Because what we trade on the lower time frame is the direction of the higher time frame. Does this make sense? All right, everybody, write out your checklist rules. Number 1, determine direction. Number 2, confirm your determined direction. I want you to type and tell me which indicator settings we use to determine direction. Who is there? Who is there? Who is there? Yes. You use the lower settings to determine direction. That's 12 and 50. 12 TMA, 50 stochastic. You use the lower settings on the higher time frame to determine direction. You use the higher settings on the lower time frame to confirm direction. I'll say that again. You use the lower settings on the higher time frame to determine direction. You now use the higher settings on the lower time frame to confirm direction. H4, thank you. H4. If the black TMA on H4 to determine direction, the pink TMA and the blue stochastic on 15 to confirm direction. Let me type it there. Black TMA and yellow stock on higher time frame to determine direction. Black TMA is set to 12. Abi? Yellow stock is set to 50. Agreed? Determine direction on higher time frame using black TMA and yellow stock. Next, confirm direction on lower time frame using pink TMA and blue stock. Yes or no? Ideal higher time frame is 4 hours and lower time frame is 15 minutes. Is this correct? When 4-hour time frame is ranging sideways, you can use 15 minutes as your higher time frame and 1 minute, 2 minutes, or 3 minutes as your lower time frame. Understood? Does everybody understand this? Okay? And I've put the templates there. ATMC, 15 minutes, ATMC, or you can change it to ATM, higher time frame, ATM, lower time frame. Understanding is small, small. Good. It's small by small, sir. There's no rush. There's no rush. So, CJ, Please, this should be included in the mail. The templates should be edited and added. ATMC higher time frame 4H, ATMC lower time frame 15M, so that becomes what we just send directly to them. Okay, let's implement that even on the slide. Okay, so determine higher time frame direction, confirm higher time frame direction. Does this make sense so far? Then we now go into entries. Abi, what are the techniques for entries? Because once I determine the direction and I confirm the direction, the next thing is how do I enter in a safe way, in a safe manner. So do we know how to determine direction now? Do we know how to confirm direction now? Do we know the different settings? All right. So now we're just going to discuss entries. How exactly do we enter? Well, it's very simple. Our entries typically are done on the 1 minute. Typically, they are done on the 1 minute. And I'm going to show us the different entry techniques we use on the 1 minute. On the 1 minute. First entry technique, right? First entry technique is we want to see price closer, if selling, we want to see price closer to 85 than to 15 because we want to do one stochastic cross, meaning a cross of the stochastic from the 85 to 15. What else do we want to see? We want to see the TMA band sloping downwards. We want to see the middle line as color red, and we want to see price come outside the rebound. The arrow should be printed, and then we enter as price is coming back down. Does that make sense? Does that make sense? I'll pick it up, don't worry, guys. Does that make sense? First entry technique, you can see it written there, 1 minute stock cross. On the 1 minute, we want to see price coming from where? 85. There should be room on the downside. You don't want to be entering at 15 because 15 after 15 is where? Now you can get it to, like if you had entered here. If you had entered here, did price not come out of the TMA band? Did you not see the arrow? Is the middle line not red? But where was this guy? So the question we ask you is, where were you when it was at 85? The train has left you. The train has left you. Let it go. Let it go. So what's the first entry technique? What's the first entry technique? 1 minute stochastic cross. That's the first entry technique. And what are we looking for? What are we looking for after we've determined the direction? Online community, are we together? What are we looking for in our first entry technique, which is 1 minute stochastic cross? We are looking for price to be close to 85. Middle line should be, price should have bounced outside of the stochastic and be rebounding back. Yes or no? Because we want to catch a move from 85 to 15. If selling, yes or no? If buying, let me see if we can find something for the buy. The buy is just the inverse. If buying, okay, fantastic. If buying, if buying, if buying, If we are determined direction of the 4 hour as a buy and confirm direction of the 15 minutes as a buy, what we have done, look at this here. Price should be where? Why? Because we need room for it to move all the way to, thank you. What's the next thing? It should be outside the band. And what color should the arrows be? Thank you. What should the middle line be? Thank you. What do you want to do? We enter when it crosses it above. Abi, trying to catch from 15 to... Is that making sense? Now, someone can look and say, oh, but it bought here now. I will have bought. Yes, but what is the higher time frame trend? What's the 4 hour trend? Today, 23rd of March. When we analyze 4 hour. Thank you. What was the confirmation of the 15 minutes? So, will we have taken this buy? No, but I'm showing you that even in a sell trend, there are still buys. Why? Because this is how sell happens now. Lower low, lower high. This is the pullback, Abi. So this was a pullback before it now continued with the sell trend. The biggest way to frustrate yourself is to try to catch buy, sell without doing trend analysis. It will be looking good until you will be frustrated, guaranteed. But as an entry technique, did you see it work? Why was it short-lived? Because you are trading against the higher time frame trend. Does this make sense, online community? Do you understand the first entry technique? Please write it, type it out. The first entry technique. Type it. And you will stick a chart of it. If buying, price should be coming from 15 towards 85. Middle line, color blue. Rebound arrows pointing upwards. That's the first entry technique. 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 Is this making sense so far? Do we all have our entry technique? All right. That being said, let's move to the second entry technique. Second entry technique. We have the first. Let's move to the second. Are we tired? If we are, we can do a 10-minute break. If not, we keep it moving for another 20-30 minutes. Are we tired? 10-minute restroom, bathroom break? Or should we continue for another 30 minutes before we have our break? Please let us know. Please let us know. Online community, are we tired or we continue for another 30 minutes before we go on a bathroom break? No answer? No answer? We continue. We continue. Thank you, thank you, thank you. Okay, there's an answer. There's an answer. We continue. Beautiful, beautiful. So, we have our first entry technique. It's very clear. Oh, the pink TMA and the blue. Not that you use the black. Oh, black is for determining direction. Pink is for confirming direction and confirming entries. Not that someone will be using black. Black is very sensitive It moves very fast. That's why we use it on the higher time frame. So what's the second entry technique? The second entry technique is what we call 5-minute support and resistance break and retest. What do we mean by that? 5 minutes support and resistance break and retest. 5 minutes support and resistance break and retest. There's my whiteboard. Break and retest. This is what it looks like. As we all know, we define trends in terms of higher highs and higher lows. Yes or no? But we can also define trends using support and resistance. What do I mean by that? This is exactly what I mean. If price is coming down and something pushes it back up, what do we call that something? That region? Support. If price is going up and something pushes it back down, what do we call that region? Resistance. Thank you. Thank you. Any region that bounces price up is called the support region. Any region that slams price down is called the resistance. So we can also define trends using support and resistance. What do we mean by that? A downtrend is when, what's this here? Support. If you want to know if something is support, support looks like V, while resistance looks like N or A. Resistance looks like A, support looks like V. This support, this support, this support. Anything that pushes price up is support. Anything that pushes price down is what? Resistance, resistance, resistance. In a downtrend, previous support becomes present resistance. Previous support becomes present resistance. Previous support flips and becomes present resistance. Does that make sense? As price keeps going down, it will be flipping support, turning it to resistance. Flipping support, turning it to resistance. And as price keeps going up, guess what happens? In an uptrend, price keeps flipping previous resistance and turning it to support. Does that make sense? All right. So what is our second entry technique? If we are selling, we want to see a previous support level get broken, Abi, and then retested, and it holds as resistance. Does that make sense? We want to see a previous support level broken and retested as resistance. As that retest happens, you can take your entry here, because we expect this support too to be what? Broken, and it to become what? Resistance. So this is another entry. Boom. Does this make sense or it doesn't make sense? And we expect to see this on the 5-minute time frame. When we see this thing that I've just drawn happen on the 5-minute time frame, so you see our entry, entry, entry. Does this make sense? Entry point, entry point, entry point. Online, does this make sense? Online, if it makes sense, please say that it makes sense. Say that it makes sense, please. If it makes sense, please let us know that it makes sense. Thank you, thank you, thank you for your cooperation. Does it make sense? Fantastic. So now we're going to look for it in the chart. On the 5-minute time frame. On the 5-minute time frame. You can also look for it on the 3-minute time frame. So let's go back. Let's check it out. Let's check it out. Let's check it out. Let's check it out. Let's go back to our chart. And let's check it out. All right. So I'm going to put this as a purely naked chart. And I'm going to change it to the 5-minute time frame or the 3-minute time frame. 5-minute time frame or the 3-minute time frame. And we said we want to see a 5-minute previous support become a resistance. Remember, what's our higher time frame trend? 4 hour. What's our 15-minute confirmed trend? Sorry, what's the trend direction? What's our higher time frame trend direction for today when we did our analysis? Yes, it was a sell. What was our 15-minute confirmed direction? Sell. So what trade entries are we looking for? So what are we looking for? Previous support turned to resistance. Okay, so where is the previous support? Where is the previous support? Where is the previous support? Previous support. Is this a support here? Is there another support here? How do we know? Anything that bounces price up. Support looks like V. Support looks like what? V. Yes or no? Let me mark those regions. I'll use a square. Is this a support region? Is this a support region? Nobody's answering me. Oh, thank you. What do we say must happen to that support? Is this the break here? Thank you. And what must happen to the support once it is broken? And it was become, and resistance is letter A, Abi. When it got here, what happened? 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 What happened to support? Previous support became on the 5 minutes, yes or no? Where we have entered? Yes or no? Yeah, or if I look at this place. Is this not a support here? That now became another resistance here. It was broken and it became a resistance here. This is where we will have entered. Yes or no? If you had entered here, what would have happened? Will you have caught that move? Thank you. Do you see the second entry technique? All right, Jayola, don't worry. The recording will be available for you. Do you see the second entry technique? Are we together, sir? Brother Joe, is it entering? All right. Thank you, thank you, thank you, thank you, thank you. See what's happening here. What is this level here? Thank you. What is it looking like it wants to become here? And this is the break. Abi, let me draw the square again. Let me draw the square again. Mind you, it's a whole zone. Do you understand? So if price breaks here now, Abi, and collapses downwards, what will have happened? Previous, it now does this, it now comes here. What are you expected to do when it does this and comes down? Thank you. You continue the sell because in a downtrend, what happens? Previous support becomes, does that make sense? On the 5 minutes and on the 3 minutes, that's an entry technique. Are we together? Are we? Thank you. Thank you. Thank you. Thank you. Thank you. Thank you. Understood? Now imagine that price does this. What does that tell you? Thank you, because a previous resistance has now become what? Once I see this on the 5 minutes, I'll go back and check my 15 minutes because something is wrong. Then I'll go back and check my 4 hours. It's possible at that time 4 hours I started ranging. Yes or no? Thank you. Does this make sense? All right. Do we understand the second entry technique? They're going to give me 5 examples of this from the chart. Anytime, anywhere on the chart, any 5 minutes on the VIX 5 chart. They're also going to give me 5 examples of 1 minute stop cross. You back test it visually. Yeah. So what is there? We have not discussed exits, sir. We are discussing entries. Do like this. Mr. Moses. Generally, the entry rule for support and resistance entry technique, not even entry technique, the entry rule for any, I'm making it up. We exit as risk to reward of 1:3. That's 1. We exit as opposite liquidity grab. That's 2. Or we move our stop loss to break even when we have made the amount that we risked and we just allow price to ride with the trend. We are getting there. Just let's take it 1 minute at a time. Okay? There are many exit rules. When price moves from 85 to 15, when it reaches 15 and starts ranging, you may want to close. When price hits another support level lower down and then starts breaking resistance up, you may want to exit. When there's a change of character, you may want to exit. It depends on you. When it grabs opposite liquidity, you may want to exit. It truly depends on you. Okay? All right. So, our third entry technique. Our third entry technique. And this entry technique is for those who don't have time to watch their charts every day. When they are busy and they still want to take advantage of trades. You are busy and you want to take advantage of trades. So how do you enter? We enter using certain chart patterns. Okay? And we use those chart patterns to set limit orders. For example, this one now, you are physically there, you are watching. When you get to entry signal, you come and you click on new trade. Come and you click on new order. And you enter your trade. You just come here and click on new order. And then you enter your sell or buy, whatever the case may be. You enter your sell or your buy, whatever the case may be. Okay? So now I'm just entering theoretically. Just enter your buy. This is a market order. This is a market order, right? I enter that market manually, right? I'm trading against the trend, so this is a market order, right? You set your stops, you set your take profit, and all of that. Okay? But you may not always be there to place your trades like this. So you may want to learn this third method. there are two patterns we look at, right? And let me show you what those patterns are. I just showed you what a market order is, where you enter exactly at the market. I just showed you what a market order is, where you enter exactly at the market. So now I'm going to show you a limit order. A limit order using two patterns. What are those patterns? A quick Google search. Now, there is something that we call the morning star pattern, as well as the evening star chart pattern. And I'm going to explain it to you very simply. How many of you know that trading is just a battle between buyers and sellers? And all that we do as traders, we want to be sure of the side where the majority, the big money is. For example, if you find out that tomorrow Dangote is coming to buy land in the next street for a refinery, and you find out today and it's confirmed that tomorrow Dangote is coming to buy land, what are you going to do? You buy the whole neighborhood, yes or no? Why? Because he's a big buyer. Dangote went to buy land for refinery in Ibejuleki, and everybody started running towards Ibejuleki. It's still the same in trading. We want to buy when the big money is buying, because our own money is too small to push demand. And we want to sell when big money is selling. Yes or no? Thank you. So, when buy orders are more than sell orders, when the buyers are more than the sellers, what will happen to price? Let me give you a good example, a simple example. Imagine that we're playing ball on a very hot afternoon. There are 22 players, and someone is selling pure water, and she came with just 10 sachets of pure water. Very chilled. We have been playing for like 5 hours, and everybody's thirsty. 22 players, 2 coaches, 24 people. How many bags of pure water exist to be sold? How many sell orders are there? No, 10 bags of pure water, 10 sachets of pure water. How many sell orders are there? 10. How many things can be sold? How many sell items are available? Only 10. Can we sell more than 10? Thank you. How many buy orders are available? 22. Yes or no? Are the buyers more than the sellers? Are the buy orders more than the sell orders? So what will happen to price? So pure water that should be 20 naira, can she sell it 50 naira? Will she get away with it? Because there are more buy orders than sell orders. Does this make sense? Thank you. In that market, do you want to be the buyer of the water, or do you want to be the seller of the water? Thank you. Thank you. Do you understand? Where am I driving at? That when the buying strength is more than the selling strength, when the buy orders are more than the sell orders, price will go up. Yes or no? Thank you. And when we want to buy just before the other buyers come in, on that queue, wouldn't you want to be the first person buying? So that at least you get a good price. Thank you. Thank you. So we look at the charts to look for the place where there was a battle between buyers and sellers, so we can know who eventually won that battle. So imagine that you have a way of seeing the battle between buyers and sellers, and now discover that the buyers won. Do you want to be selling or do you want to be buying? You make money when price goes in your direction, yes or no? If you click buy and price goes up, are you making money or losing money? Thank you. Online community. If you click buy and price goes up, are you going to make money or are you going to lose money? If you click buy and the chart starts going up, are you going to make money? Thank you. If you click buy and the chart starts going down, what happens to you? Thank you. If you click sell and the chart starts going down, what happens? If you click sell and price starts going up, what happens? We want to find a way of predicting which direction the market will go. That's why when people ask this question to traders, they say, how was the market today? It's an irrelevant question. What you should ask is, how was your trade in the market today? Yes or no? If you sell VIX 75 and I buy VIX 75 and VIX 75 sells, what type of day, the market that day, what was it? It's a good market. Me, what will I be saying? Bad market. So what we need to know is find a way to know where the market is going next and follow the market. Find the battle between buyers and sellers and figure out who won. And if you figure out who won, you follow the direction of the winners. Yes or no? All right. So there are some chart patterns that can give us a hint as to who won. We want to trade those chart patterns. Are we ready to learn those chart patterns? All right. So let's imagine that price is coming down with some very chunky candles, right? And then you now see a very tiny candle like this. There's a problem. Abi? Because look at all these sellers coming with selling strength. Yes or no? Then look at the size. Can you hear us now? Can you hear now? Is the audio better now? Okay, fantastic. Sorry, we will change the battery on that other mic. All right. So I was saying that if we see this very small guy here coming to stop these hefty guys, it means there is more to this guy than we know. So if the next candle is now a very big candle, in the opposite direction. We now understand. We sometimes call this stopper shocker. That's the name we gave it. This is the guy that stopped them, and this is the guy that shocked them, like boxing. Or when sometimes in secondary school, when they want to flog you, they'll be giving you small flogs. They'll be setting on your bum. Especially those chemistry and intro tech teachers. They'll be setting your bum. Then when they set it well with little, you'll be very foolish to think that's the real size of the candle. It will now come with the main candle. So this guy is just setting the pace or the stage for the real guy to come. So how do you identify it? Very simple. You have candle number 1, candle number 2, which is a very small candle, and then candle number 3, which is a very big candle in the opposite direction. The high of candle number 3 should be higher than the high of candle number 1. Do you understand? This is very important. This is called the morning star chart pattern. Although we call it shocker stopper. So let's see the examples of this morning star chart pattern. This is it here, the morning star chart pattern. You can Google it, but there is a little thing you must be aware of in our own morning star. For our morning star, candle number 3 must be bigger than candle number 1. This is it right here. Let me circle it. This is it right here. Do you see candle number 1 is the cell that is very chunky. Candle number 2 is the stopper, which has a very small body. And candle number 3 engulfs. You can see that this high is higher than this high. Yes or no? That's our preferred candle. That's our preferred candle. Now, you notice for this one, candle number 2 is a cell candle, but it's still a tiny candle. The preferred one is when this is green and green, showing that the buyers are already in. But this one can also pass because the next candle engulfs candle number 1. The high of candle number 3 is higher than candle number 1, right? Does this make sense? What we now do is we'll put a horizontal line at the high of candle number 2. So let me show you in the chart. Let me show you in the chart. We put a line at the high of candle number 2. So let me look for, okay, let me explain the opposite of it, since it's cell examples that we're looking for. All right, so how does this work? We will put a horizontal line here. Anytime price comes back to the high of candle number 2, we put a buy limit there because we expect price to go up. Anytime price comes back to this line, we expect it to do what? Go up. So it is a buy reversal pattern for buy orders. And we use the morning star only when the confirmed direction is a what? It's an uptrend. And only when it is an uptrend do we use the morning star, because we are looking for buy trades. Does this make sense? Does this make sense? Candle number 1 is a cell candle. Candle number 2 is a tiny candle. Candle number 3 is the shocker, the big candle, whose high must be higher than candle number 1. The high must be higher than candle number 1. The high must be higher than candle number 1. I'm going to take I'm going to snipe this and put it in the Telegram group. Snip this and put this in the Telegram group so that you can see it. Okay? And not just see it, you can make use of it. So this is what we are looking for buys. For buys. Now for sales, what we look for sales is the evening star. The evening star. The evening star. So let's do a quick search of the evening star. Evening star. Okay. Evening star. The evening star is the exact inverse of the morning star, and it is used for sales. So you find the morning star at support, you find the evening star at resistance levels. You find the morning star at support levels, you find the evening star at resistance levels. Okay? You use the morning star when the confirmed trend is a buy trend. You use it to set buy limit orders. And you use the evening star when the confirmed trend is a sell. You use it to get sell limit orders. I hope this is explanatory enough. All right, let's look at examples of it. Okay, I'm still waiting for it to load, but it's taking time, so let me just draw it and we see it. So for the evening star, this is what you want to see. You see big chunky buy candles, a buy move to the upside, and guess who now stops it? A tiny little guy. What does that let us know? Candle number 3. What are we expecting? So this is candle number 1, this is candle number 2, candle number 3. And the low of candle number 3 should be what? Lower than candle number 1. What do we do? You put a horizontal line here. That's where your sell limit will be because you are expecting to sell. So when price comes back here, what do you expect? Why? What's the logic? These are buyers, yes or no? These are sellers, yes or no? This was the battleground. You know, in secondary school where they would draw a line in the sand and say, they burn your mama well, cross this line. They burn your papa well, cross this line. When you now get to that line, that's where the battle starts, yes or no? So we are working on the premise that since the sellers won the first time, when price goes back to that level for the first time, the sellers will win again. Does that make sense? Yes, that's the logic behind it, that if the sellers are able to issue this kind of heavy blow, if price gets back to that level, the sellers will still have a little bit more energy to, do you understand? Does this make sense, online community? So here you put a sell limit. And we use this in sell, confirmed sell trends. Morning star is for confirmed buy trends. Evening star is for confirmed sell trends. Okay? All right. So let's look for examples of it. Let's look for examples so that I'll include that also. And we see how it works. And we look for it. So once you draw that middle line and you place your order, just go, you place your order, your take profit, and that's it. Remember, candle number 3 must be lower than candle number 2. The examples you see online, they don't emphasize that, but we emphasize that. We emphasize that. You have seen one, but okay, I saw one too. That colored one. No, that one is okay. Yes. But I want one that shows the two of them together. I'll keep checking. I'll see it. I'll see it very soon. Very soon. Okay. Let me see. Okay, fantastic. I've seen one here. So you see candle number 1, candle number 2, candle number 3. This is lower than this. So you put a line here. If price gets back here, so this is your sell limit. Okay? Does this make sense so far? Now we're going to look for it in the chart and take it as our third entry technique. Our third entry technique. Okay. All right. So back to our chart. Where we look for it. Okay. Candle number 1, candle number 2, candle number 3. Now these are this is a confirmed sell trend. And because it's a confirmed sell trend, we only wish to sell. Okay, I'm seeing a very sweet, very sweet one here. Okay, I'll zoom in. So that we all can identify oh, beautiful. Beautiful. Are you seeing what I'm seeing? Are you seeing what I'm seeing? Do you see something here? Can you see it or you can't see it? Let me zoom in again. Our viewing pleasure. Okay. Look at this. Can you see it? Candle number 1 is a buy. Yes or no? And it's even coming all the way here as a buy. Yes or no? Candle number 2 is a sell. Abi? And then what do we have here? Candle number 3. The low of candle number 3, is it lower than the low of candle number 1? Thank you. 22nd of March. That was yesterday. What was the trend? What has the 4-hour trend been throughout this week? Sell. So we are seeing an evening star in a sell trend. Is it fulfilling the conditions? Thank you. Because an evening star is a sell chart pattern, and we are seeing it in a confirmed 4-hour sell trend. What did I say we will do? We will put a horizontal line at the low of candle number 2, because that's where the battle was fought, and that's where we expect the battle to be won if price gets there again. Put this here like this. Big background. Have you seen it? Have you seen it? What did price do? When price came back there, what did he do? So I do not need to have been in this market. As I just saw this chart pattern, as this candle number 3 just closed, confirmed 4-hour sell trend, confirmed 15-minute sell trend. I've seen my evening star. Candle number 3 has closed lower than candle number 1. I will have put my sell limit at 265028. So I'll just come here and click on the order. That's as at yesterday. Instead of doing market execution, let me clear all these drawings. Instead of doing market execution, what would I have done? Pending order. What type of trade do I want to take? Sell limit. So what do I click on the type? Sell limit. I put my volume there. We'll talk about position sizing, risk management later. Now we're just discussing the direction. Abi, I put my volume there. Our stop loss when trading ATM cash flow is 2,500 points above our entry. So what was our entry? 265028. Abi, 265028. Now we are selling. So we expect price to do what? Go lower. If it goes lower, do we make money? If it goes higher, do we make money? We lose money. So where will our stop loss be? Below or above our entry? It will be higher above, because in a sell, if price goes above, you are losing. So when the loss reaches a particular level, we are saying stop the loss. Okay? So once it goes 2,500 points against you, then you should get out. So if price was at 26, if our line is at 265028, what will our stop loss price be? Calculate it. I told you it's 2,500 points above our entry, because it is a sell. Okay. 265028 plus so what we are telling the market at that 267528. So I'll draw a line here to show us, and I'll put the parameters. 267528. Abi, that will have been our stop loss. So, meaning we sold here, and we said the price goes up and touches here, take us out in a loss of 2,500 points. Does that make sense? Then our take profit is always 3 times what we risked. So what did we risk? So what will our take profit be? Thank you. Now, our take profit, if price goes down, are we in profit or in loss? So our take profit will be what? Our entry price minus 7,500. Yes or no? So what was our entry price? 265028. What will our take profit level be? $257,528. So let's write that. 257,528. Oh my. 257,528. Agreed? So I put that there. Okay. We now want to see, will price touch the take profit before it first? would this trade have gone in our favor? Because remember, it's a limit order. So this is what we will have entered when we click on the order. We will have done pending order, yes or no? Sell limit, abi? Our price will be what? 265. The line now of candle number 2. 265,028. Our stop loss will have been what? Our stop loss will have been 267,528. Yes or no? And our take profit will have been what? 257,528. Yes or no? Beautiful. And we'll click place. And it will have entered it. We'll have walked away. We'll come back to see that we have lost that minus 2,500 points, the dollar value, or we'll have made 7,500 points, the dollar value. Yes or no? So you shut your laptop and go about your normal activities. So let's zoom out and see what will have happened. Do you see our line? Let me zoom out. Let me zoom out. Do you see our stop loss here? Is this not our stop loss? This is where we'll have entered, Abi. And where is our take profit? Our take profit was here. What did price do? Thank you. Are you seeing it or you are not seeing it? So this method is very good for people who are very busy. Confirm the trend. Sorry, identify the trend on the 4-hour. Confirm the trend on the... Then just be looking for evening star, stopper shocker. As you see it, enter. Put your limit order. Online community, I'm not seeing anything from you guys. And you see, it came back, but it continued to respect it, continued, and until it did what? Bam, it hit it. It hit it. Is this making sense or is it not making sense? This is the third entry technique, and this entry technique, you don't have to be at your laptop. You put it in, you shut down your laptop. As long as the order has already entered the server, close your laptop. You come back and see two things. Loss of 2,500 or profit of 7,500 points. If you use 0.01 lot size, you have loss of $2.50 or profit of $7.50. If you use 0.010, you see loss of $25 or profit of $75. If you use 0.1, you will see loss of $250 or profit of $750. If you use 1.0000, you will see loss of $2,500 or profit of $7,500. Just one trade. But we will start with 0.001. All right, there's a question. Yes. I'm not going to answer you, Bisola, because you already know the answer to that question. What's the answer to your question? Type it, type it, type it. You know the answer, man. Type it. I'm waiting for you, man. Please type the answer. I'm smiling here because you know the answer. Please type it. I know you just want assurance, but I said it so many times. We use only M5. No, Bisola, wait. We are talking of entry techniques here. We have left how to determine direction. I'm discussing entry techniques. This is the third entry technique I'm discussing. For direction, 4-hour TMA, and confirm it with 15 minutes. The slow pink 15 minutes. If 4 hours is ranging and you cannot wait for 10 days, then use 15 minutes as your direction and use 5 minutes or 3 minutes or 1 minute as your confirmation. We are done with how to determine direction. Now, after you determine direction, oh, the bus is going my way. You will enter the bus now. So we are discussing entry techniques. And I've given 2 entry techniques before now. What's the first entry technique? 1 minute stochastic cross. What's the second entry technique? 5 minutes support and resistance break and retest. Those 2 techniques, you need to be on your chart, watching your chart. This third one is 5 minute evening star or 5 minute morning star. You can also check for it on 3 minutes. If you can't see it on 5 minutes, come to 3 minutes, come to 2 minutes. Okay? Okay? Oh, okay, fantastic. Be writing things down. If you are writing, you have what to read. If you want to use your memory to understand everything, you will experience overload, information overload, which causes analysis paralysis, which causes margin call, which causes SAPA and running away from Forex forever. Thank you very much. Do we understand it so far? Let's look for other. Okay, look at this. Look at this. Is there any other? Oh, fantastic. Fantastic. I just saw another evening star. Are you seeing what I'm seeing? Are you seeing what I'm seeing? Ah, where is it? I saw it just now. It has disappeared. No, now. Yeah. Look at this. Look at this. Are we together now? Look at this. Are you seeing what I'm seeing? Are you seeing what I'm seeing? You should be seeing it now. I'm about to circle it. I'm about to circle it. Are you seeing it? Let me see who is seeing it. You are seeing it, ma? Thank you. As I circle it, you will know whether you really saw it or not. Up move. Up move. Is that what you saw? Or is another thing you saw? Thank you. Candle number 1. Candle number 2. Candle number 3. The low of candle number 3 is lower than the low of candle number 1. Where do I drop my middle line? The low of candle number 2, because that's the line in the sand where the battle was fought and won. Here. So I put my limit order here. What are all these things by the side? So 263, 216. That's why I put my sell limit order. Now I want to confirm, has price touched it at all? So far, no. Price has not touched it. Well, guess what will happen most likely when price gets there? What should happen when price gets there? I've drawn the line now. Has price touched the line? Have you seen price? If it touches it once, leave it all. They know the London use. They know it's not a cricket. They know they use them twice. Once it touches it once, that's all. Don't go and draw the line and say, oh, but once it kisses it once, because think about it. There are sell orders there. Abi? If price goes and kisses it, it will pack some of the sell orders. If it goes and kisses it again, it has packed more sell orders. The more sell orders it packs, the less likely that that place will hold. Does that make sense? Is the first touch we want. All right? So let's mark that level. 263216. I'm going to put a pending order there, and we are going to come and check it tomorrow. You can put it on your demo too. So, what is the overall trend direction? Sell. That's why we are looking for what? Evening star. Thank you. So I'm going to place a limit order now. I'm very happy that this example is here. Let's put a limit order here. New order. At what level? 263,216. Sell limit. At what price? 263,216.55. My take profit should be lower down, Abi. 7,500 points. So for my take profit, I'm going to do 263,216.55 minus 7,500. What's the value I got? 255,716.55. I already know what the stop loss is. 265,716.55. The stop loss is 2,500 above the entry, which is 10,000 above the take profit. Because 75 plus 25 is 10,000. So, place. Bam, I've put it there. I've put it there. I've put it there. I've put it there. I'm coming back tomorrow to see what price we do. I'm seeing something just now. I just saw something and it's giving me cause for concern. So I want to see whether it will hold. So I'm done with that. I've put the order there. Look at it. Look at the order there. I've put the order there. It's right there. Look at it below. Can you see it? Sell limit, lot size 0.001, the smallest lot size, entry price, stop loss, take profit. I've placed it there. That's it. That's it. Let me close this order that was just me showing you how to place market orders versus. Okay. Now I'm seeing another stopper shocker, very powerful one. Very, very powerful one. Who can show me the evening star that we just saw? That is quite powerful. Powerful. In fact, I'm seeing two back to back. Back to back. Who is there? Who is with me? Who can see it? Who can see it? They are there back to back. Up move, yes or no? Buying strength. Candle number 1, candle number 2, candle number 3. Now look again. Another candle number 1, another candle number 2, and a massive. Is rare to see them back to back on the 5 minutes, right? So I draw my line. I draw my line. This will be my line here. This is my line here. 258,930. Agreed? Thank you. 258,930. Do you now see something interesting? Do you notice that so by now, if we have put a pending order, we should be in the trade right now, yes or no? Should we not be in the trade right now? If we had put a sell limit, this is where price came to touch it now. Abi? So I'm going to enter sell now. Do you understand what I'm trying to say? If this had happened, if we had done this class, if we had done this like 15 minutes ago, price would not have been here. We'll have put a pending order now, Abi. So let's see how price will behave. So I'm going to, now it's not pending order I'm putting because I'm already right there at the market. So I'm going to put a market order, but ideally it should be a pending order at 258930. So I'll put sell. I've sold now, Abi. The stop loss will be 2,500 points above. So what's the top loss? 25. Although the take profit 258930 minus 75. 251430. So if you want to put your stop loss now, you can just drag, click and drag. So your take profit, right? And that will be 75,000 points. Where is 75,000? Or rather, this is 0.77 USD. So that should be $7.50. $7.50. So I'll keep dragging it until it gets to $7.50. Because 75,000 points at $7 at 0.001 is $7.50. If I had used 0.010, it would be $75. If I had used 0.100, it would be $750. Does that make sense? Okay, so I'm just setting my stop loss and my take profit now. That's all I'm doing. There's nothing confusing there. Because I know some people are already saying they're confused. No, I'm just setting it. And if, okay, let's just do it normal calculation so that people will not say that they are confused. Where did we enter? 258930. So I'll come to my order that is already open. You can see the order is already open. I place my cursor on it, then I right click. It will now show modify. So now I'll modify it. My stop loss value should be what? 251. Sorry, my take profit should be 251430. Then my stop loss should be 261430. So I'm risking 2,500 points to make. Thank you. So I'll click on modify. You can see now it has put it there. Stop loss 261430. Take profit 251430. Although the price is 258982. My entry price, you know, I entered at market. So it didn't take me in at 261, it took me in at 258. So the stop loss should be 258982. Sorry, the take profit should be 258982 minus 7,500, which is 251482. Okay, the difference is not much. Let me just leave it. 251482. The difference is not that much. Okay, so I've entered it, and let's see where price will take us to. So I'm still leaving the other pending order trade, and this one too. Okay, so if this level should hold, of which it should, because look at the size of the sell candle, meaning the sellers really pushed it. That was a real blow. So it should come further down. Okay. So do we understand what we just did now? If you don't understand anything I've been saying, please comment so that I can bring clarity to you. So I can bring clarity to you. Do you understand? Do you understand? So this simply shows us the battle between buyers and sellers. There is another price pattern is similar to this stopper shocker, but this one is not a reversal pattern. What do I mean by that? What I mean is that for Morningstar, price comes from below. Sorry, from Evening Star, Price is selling, price is buying, hits the stopper, and then comes down. There is a very slight difference in this one. This one is a trend continuation pattern. It is a trend continuation pattern. And what does it do? It shows us that the trend will likely continue in that direction. In that direction. The trend will likely continue in that direction. And for this one, you can look out for it on the 1 minute time frame. It is a trend continuation pattern. And how does it work? How does it work? This is simply how it works. You look out for it on the 1 minute chart pattern. This is how it works. So for this one, remember we said candle number 2 is a stopper. Candle number 3 is the shocker. Abi? And this is what that looks like. Where we said, if price is going to reverse, meaning it's coming from up, then you see the stopper, then you see the shocker. When price gets back here, what will happen? To come down, right? On the 5 minutes. Now, this is almost like the same thing, but it's a slight variation. This is a trend continuation. Look at this. For this one, price is coming this way. Do you understand? It's coming from, yes. And this is on the 1 minute. It breaks here like this, and then price comes back into this place. And this is a stop and Abi. There was a battle between buyers and sellers. Price comes down. Do you understand? This is for if you're already in a trend and you want to know whether price will keep going. So let's say on the 1 minute, I see big candles and a tiny candle. Abi? That means I'm expecting this one to be bigger. Abi? But this now doesn't happen. Instead, this is what happens. I see a candle that does this instead. That means the sellers tried. Candle number 2 shows that the sellers tried, Abi? But the buyers didn't even allow them to finish. The buyers just did what? Slam price down. If price comes back to this place, it's most likely going to come down. We don't expect price to go above the high of candle number 1. Do you understand what I'm trying to say? So I maintain myself. So imagine that you were in a sell. Price was coming down, you were in a sell. Then it formed this little candle. Then it did this. Abi? Then price now started coming back up. You can be scared that, price is going to go against me. Let me quickly close. I will not close here because of this simple thing. I will mark the high of this candle. Right? Because when price gets into this level, guess what I expect price to do? To continue going down. Imagine that you panic and you close. Then price comes here and it now starts coming down. You'll be like, So this is a trend continuation pattern. So look at this now. Let me show you the trade we just entered. And it's best to look out for it on the 1 minute. On the 1 minute. Look at this now. Where is price coming from? This is the 1 minute, Abi. We entered this trade using the 5 minute order block, stopper shocker, morning, evening star, yes or no? Thank you. We entered here. This is where we entered. Abi? But price was already coming from here, yes or no? Do you see one stopper here? Do you see one stopper here? Thank you. Do you see what happened there? Let me zoom in so you will see it very clearly. Remember we said it's just a way of seeing the battle between buyers and sellers. What do we see here? Price was coming down. Agreed? Buyers put their head here. Abi? This one went up a bit. What did the seller say? They say you are joking. So this place is a place where there were buyers. Yes or no? Does it look like what I drew? Selling pressure, stopper, massive. Thank you. Look at this place again. Abi? What happened after? Massive selling. Yes or no? I don't expect price to come above this high. Do you understand? Look at it going in the other direction. Look at this here. Abi? Buys, yes or no? Stopper, yes or no? Massive buying, and the buying continued. Yes or no? Do you understand? Do you now see that this place where there was a battle, there was also another battle here? Previous support becomes resistance. Do you see why price is continuing its downward journey? Okay? So this one is just a way of seeing price and saying, no, price will still continue in my direction. It's not necessarily an entry technique. It's just to see if the trend will continue. Does that make sense? All right. So I've explained 3 entry techniques to you. Yes or no? Thank you very much. 3 entry techniques to you. All right? All right? We'll go on a very short break. Very short break. 10 minutes. They're about to come back at maybe 1:20. And on that break, I want you to look through some of these patterns and see how price behaved around those patterns. Okay? I want you to see how price behaved around those patterns. Okay? All right. So we'll come back at 1:20. We'll come back at 1:20. Let me just do a brief recap so that you will remember the other patterns, so that you don't forget the other patterns. Okay, look at this. Now look at this. Very interesting. What was the first entry pattern we told you about? 1 minute stop cross. Yes or no? And what did we say should happen at the 1 minute stop cross? Price should be where? Yes. And outside the yes or no? And then where should this one be pointing over time? And what should happen to this middle line? Do you see that that's likely what wants to start happening? Why? Because are you seeing the yellow arrows saying you should sell? Was price not outside this band? Is this making sense or not? And then is it at 85? Is there space for it to come all the way down to 15? So what do we expect? Let this guy just start curving downwards. Let this middle line change to red. And what will now happen? Thank you. And when it gets to like 80 to 15, we're now ready to exit. Yes or no? Is this making sense or not? Can you see the trend continuation block here? Is this making sense or not? So based on 5 minute stopper shocker, we are already in the trade. Yes or no? If we now have 1 minute stock cross divergence, that's another entry for another trade. Yes or no? Does this make sense? So based on 1 minute stock cross, we are waiting for our trade entry here. Yes or no? Online community, you are quiet as if I'm saying something that is totally irrelevant. Please say something now. So based on 1 minute stop cross, are you seeing that it's setting up for a sell? Okay. Now, 1 minute stop cross. What's the second entry technique that we said? 5 minutes support becoming resistance, either on the 5 minutes or on the 3 minutes. Let me bring this now to 3 minutes. Time frame, minutes, 3 minutes. Okay. Now watch this on the 3 minutes, Abi. Let me zoom out. What are we going to mark here? Previous. Okay. Now look at this. So where is it? Previous support. Where is the last support that I can see? Insert, object, shape, rectangle. Yes or no? This is a support area here. Yes or no? All this place is support. Abi? If I'm wrong, please say I'm wrong. All this place is support. Abi? What happened here? Previous. This support here. Abi? What did it become here? 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 Is this making sense? So is that entry a correct entry based on 5 minutes evening star, based on previous support becoming resistance on the 3 minutes, Abi? And then based on 1 minute stock cross, yes or no? Because if this guy continues like this, oh boy. If this guy continues like this should curve down, this should become red, this is coming from 85, and there's still space for it to get to 15. If you even look at this again more clearly, on the, where is it? On the 3 minutes or 2 minutes, I'm sure we'll see. Okay, fantastic. Previous support. Where is support here? Is this a support level? We said support is anything that pushes price up. What is this here? Is there a support here? This is a support now. Price came into it, and what did it do? Pushed it up. This is even another support here. Price came down into it, and what did it do? Pushed it up. Did it become resistance here? And has this support become resistance here? Thank you. Is this a good trade? Even if we lose on this trade, is it still a good trade? Oh, don't think because the trade is a good trade, you can lose now. You think, no, that's why we have stop loss, 2.5. Do you understand? Thank you. Okay? Thank you very much. Do you understand the 3 entry techniques now? All right, then. Thank you very much. We will be back at 1:30 to just discuss position sizing, which we have already discussed. We'll discuss just one more thing that we use to, not for trade entry, but just to have an idea of where price may be going on a longer time frame. We call that day before yesterday entry. Day before yesterday entry, DBY. Okay? So we'll discuss that and then we'll be done for the day. All right? Now, some of you are looking at this trade. The outcome of this trade is good if it goes into profit, but it's not one trade that makes a trader. It's understanding your setups very well and trading them And the recap of that is determine 4-hour direction using the black rebound arrow. Confirm it on 15 minutes using the pink rebound arrow. When you have determined and confirmed your direction, you now move to entries. What are the entries? 1 minute stochastic cross, 5 minute stopper shocker, also known as evening star or morning star, then 5 minutes or 3 minutes support becoming resistance. Same thing, you can also do 3 minute stopper shocker, 5 minutes or 3 minutes, okay? And that's basically our entry technique, okay? See you at 1:30. Yes, sir. Yes, sir. Strategy simply means the entry rules. Like our strategy now is ATM cash flow. The approach to which we determine direction. So there are some people that don't use indicators. Like indicators are totally useless. You don't need indicators. And it's true because if you look at 5 minutes evening star, you don't use any indicator. You just use candle number 1, candle number 2, candle number 3. But by the same token, did we not use 1 minute stock cross and it showed us entries? So I'm not the kind of person that will say, oh, indicators are bad or good. No. So some people have naked strategies, meaning they don't use any indicators. They trade price action, they trade naked. Other people have indicator-based strategies. Generally, indicator-based strategies are not as effective as naked plain charts. But indicator-based strategies show you clearly the rules. There's no discretion. So me, when I teach people, especially when I'm introducing them for the first time, I don't just want to teach you how to make money. I want to see if you can follow rules. That's why I put indicators. Because if it's discretionary, the person will not say, I felt like, and it was looking like now, stochastic is not at 85. Can you justify your trade? But if I tell you morning star, you can say, well, this was almost a star. No, it's either it or it's not it. Do you understand? That's why I like indicators. I was introduced to trading using indicators, and it made me know straight away the rules to follow and the rules not to follow. So that's what they mean when they say strategy. A strategy is a concise, sequential, step-by-step checklist of what you look out for that shows you the direction to trade and when to enter and when to get out. A trading plan is what you do when your strategy works and what you do when your strategy fails. So my trading plan can be, if this strategy gives me 3 entries and all 3 are a loss, I stand up from my desk for that day, take my L like the learner that I am, and go and do something else with my life. Do you understand? I go and cry and say, oh God, why is my life like this? Or I go and warn my village people that they should leave me, they followed me to Forex. Or I go and play tennis. Or I go and focus on my work. Do you understand what I'm trying to say? A trading plan, a trading strategy is the base bedrock of a trading plan. A trading plan is like, oh, I have $50. I will not put the whole $50 at once because I got my strategy said enter. No, I'll divide my $50 into 25 places or into 20 places of $2.50. I will only risk $2.50 per time. That's a trading plan. A strategy is just entry rules, exit rules. A trading plan is what to do when your entry works and what to do when your entry fails. It's more holistic. You get what I'm trying to say? All right, sir. So we'll meet at 1:35. Identify this. Go and take a break. Go and take a drink. And we'll come back for the next 30 minutes because the class closes by 2. And we'll take it from there. All right. Thank you very much, guys. God bless. CJ always reminded me to remove Okay, we're back. We are back. Good afternoon, everyone. Again, and welcome. No, that's not the TP of that trade. That's the TP of the pending order. Nostro is showing Cynthia shaking. Hopefully, G will collapse and we'll have a last minute 24-hour miracle. As well. Okay, everyone, if you're back, please let's get started. 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 Okay. So now we want to take on the last part of the training, something we have to look out for. If we're all here, please, I need to see those online confirm that they are back. Okay, fantastic. Damian, welcome. Damian, welcome. All right, so now I just want us to be aware of one thing. It's very important that we are aware of it, and it's something that it's a chart pattern that has to do with time and price, and it also has to do with the higher time frame. So we call it day before yesterday concept, DBY. And what does it entail? Quite simply, let me put a chart, a naked chart, a chart without indicators, and I put it to the daily time frame, and I zoom in. Now, what does the day before yesterday concept imply? The day before yesterday concept is pretty much like the trend continuation that I just spoke to you about. And what the day before yesterday concept implies is that every 3 daily candles you see, for every 3 daily candles you see, they are either extending or reversing. What do I mean by that? If we take today as candle number 1, so when we talk of the day before yesterday candle, we will have candle number 1, candle number 2, candle number 3. If we make today's candle our candle of focus, that means the 3rd candle before today is our day before yesterday concept. What do I mean? Looking at today. So this will be today, candle number 3. This will be candle number 1, candle number 2, candle number 3. Where 3 is today, 2 is yesterday, and 1 is day before yesterday, right? What this simply implies is if you have candle number 1 candle number 2, candle number 3. Candle number 3 will attempt to get into candle number 1. That's basically the concept of day before yesterday. That candle number 3 will attempt to get into candle number 1 if it is going to pull back. So for example, we have this here, we have this here, and then we will have this other candle trying to get into candle number 1. Candle number 3 will try to get into candle number 1 if it is pulling back. Let me show you an example of what I mean. When you have established the trend, so let's say we have established that price is going up. It's an uptrend, right? Like this. And you now see candle number 3 coming down. Don't imagine that candle number 3 is starting a reversal. No. Candle number 3 is just trying to touch base with candle number 1 before it continues what it is doing. That's like the concept of the stop hunt, where they want to come down, but they will go up a bit to deceive people that they are going up before they now finally come down. And that happens a lot. Look, for example, let's look at this here. Right? I'm going to put a line there so we can see it clearly. So imagine that this is candle number 1, candle number 2, and candle number 3. So let's look at what happened on day 3 of candle number 3. This is day 3, right? And this is day 1. I'll zoom in now so we can see what happened on those days. So let's look for those lines. Okay, fantastic. Okay, so this is the 1 hour time frame. You can see the period separators. This is candle number 1, candle number 2, candle number 3. Day 1, day 2, and day 3. Let me delete this so you can see them very clearly. Do you see day 1? From here to here is day 1. 1 whole day. Look at it, 13th of March, 14th of March, and 15th of March. All right. Now watch this. Do you know that if you had come somewhere here on the 3rd day, you say that is a sell? Yes or no? Break of structure to the downside, Abi. Previous support has become what? Resistance. But that's not really what's happening. What's really happening is that day before yesterday concept, today's candle wants to enter into part of day before yesterday's candle for a retest. Do you get the point? So when price got here, you will know that this is not really a sell, rather this is a retest of candle number 3 into the body of candle number 1. This is something that happens a lot in VIX 75. A lot. So you will know that, oh, it's just day before yesterday concept. Today's candle is trying to touch base with day before yesterday's candle. That's all. And what this will now do is it will, imagine if you were a seller here, the price wiped out all your stops.
sorry, you were a buyer, so you bought from here, and it wiped out all your stops. You'll be feeling very bad now, Abi. Then the next day, it now went all the way up. You say these people are out to get me. No, it is a stop hunt. It's something we've noticed that they like stopping, hunting the stops of the early buyers by taking price back into the activities of the day before yesterday candle. Let's look at it again. Look at this. Look at this. If this is candle number 1, candle number 2, and candle number 3, look at what happened. This guy came all the way into the body of candle number 1. Do you see? Why? All these early buyers, guess what they want to do? They are buying now. So their stop loss, if you bought here, your stop loss will be here. If you bought here, your stop loss will be here. Yes or no? They sold everything, wiped out all their stops, and then what did they now do? So I'm saying this so that you try to establish that am I in a day before yesterday concept? So that whole day, that candle number 3, you just be like, look, let me just leave this day for you. I will come back tomorrow when you have done your retest into day before yesterday's candle. Does that make sense or it doesn't make sense? Okay. Welcome back, everyone. Please join back. Sorry about that. Please join back. Sorry about that. Sorry about that. Are we here now? Is everybody back? So you would notice, are you here? Is everybody back? Okay, fantastic. So you will notice that sometimes you need to be aware if there's going to be that sort of pullback. For example, let's look at today. So it's not an entry technique, it's just a price behavior thing. If this is candle number 1, and this is candle number 2, and this is candle number 3, agreed? Okay, let me draw a line of the low. This is the low of candle number 1, Abi? This is the breakout, yes or no? So, price may actually still be selling, but between today and tomorrow, oh, let me clear this now, I've moved it. Candle number 1, candle number 2, candle number 3 on the 1 hour, right? So this is the low of day 1, day before yesterday, yes or no? This is the breakout, yes or no? So do you know that between today and even tomorrow, we may see price do this and come into the body of candle number 1? Then we now say that's a buy trend. No, it may be an attempt to frustrate all these buyers that bought early, to wipe them out of their stops. Then when it wipes them out of their stops, what will now happen? It will now move with speed. Does this make sense? This is just something we've noticed that likes to happen. Okay? Stop hunts. So if we now see between today and tomorrow, this now comes into the body of this, but it respects here and just goes halfway into candle number 1. What do you expect to happen there? To sell. Do you understand? They do this to hunt stops. We don't know why. It may be how they make their money, and that's totally fine. Okay? Okay? So this is just what we want you to take note of. Stop hunts. So that when you now catch the actual trend direction, you know they have done their day before yesterday concept, and you can really ride it to your satisfaction. Okay, candle number 1, candle number 2, candle number 3. So candle number 2 usually is the break of structure candle. Like the way this one broke structure to the upside, then this candle number 3 was now the retest, right? Or the way, if this is candle number 1, candle number 2, candle number 3, the way so sorry, we are having network issues. Please, sorry about that, but we're almost done. So all I try to do when trading like this is to ask myself if they are doing a stop hunt, a daily stop hunt. And if they are doing the daily stop hunt, where do I expect that stop hunt to end? And where do I expect the trend to continue? So if I'm doing day before yesterday concept, and this is candle number 1, this is candle number 2, and this is candle number 3, I don't expect, so this is the break of structure, yes or no? This is the previous support. So this guy should just come somewhere into this place before doing what? Continue going down. Does that make sense? But now imagine that based on day before yesterday concept, right? It now does this instead. So this will now be candle number 1, candle number 2, and candle number 3. And this is the high of candle number 3. It now does this and breaks above candle number 2. What will I now do the next day? I'll now say, okay, this is weird. What will I now make this? I'll now make this one candle number 1, candle number 2, and this will now be what? So I will now expect a pullback into the body of candle number 1, meaning this was the day, this was the breakout. So when price comes somewhere into this place, what do I expect? Thank you very much. You are understanding the concept of day before yesterday concept. Now, sometimes it can take 4 days. So forget that I said it's candle number 1, 2, and 3. What we want to see is a breakout of a daily high and a pullback to retest that daily high, all within the space of about 3 to 4 days. Does this make sense, sir? Okay. Very, very important. Very, very important. Okay? Very, very important. So that's how we observe stop hunts, where you are right on the direction, but before they allow price to go in the predetermined direction, they frustrate all the early buyers. For example, look at this. Candle number 1, candle number 2, candle number 3. Agreed? Okay. This is the high of this day, yes or no? And this is the pullback. So break of structure, yes or no? Then this should have done the retest, Abi. But what did they now do? They now pulled it all the way down and frustrated all these guys. And then now, what is now happening? This is now a pullback into this level so that it can go down. Do you understand what I'm saying? So this was a trap, because we would have thought that somewhere around here, what should happen? It should go back up. But instead, it frustrated all the early buyers, then came back down, did a retest, and then is pushing down. Okay? It's a bit tricky. It just takes you looking at it many times to understand what exactly it is they are trying to do. But the long and short is, on a daily candle, we want to see price do this. So this is the daily candle, this is the second day, this is the third day. we want to see price break out, then come back to retest here and then continue going. If that fails and instead we see it do this and break below this candle number one, then it means this is what they want to do. Bring it all the way down. Okay? So this is all about hunting stops of traders and frustrating them before going eventually in the direction that they predicted. Okay? So based on this now, I just want to make sure we understand this. Imagine that this is candle number one, this is candle number two, and this is candle number three, right? Do we expect price to break above the high of this? No, because candle number one is the range, candle number two is the breakout, candle number three should be the retest, and then thank you. If we see price, I'm just repeating myself, so that we can just have an idea. If we see price come all the way here, that means they frustrated all the buyers on day two and all the buyers on day three. That means they will do a pullback into two and then push it up. So two will now become candle number one, candle number two, and candle number three. Thank you. So this is the last phenomenon. It's not an entry thing, but it is so you understand where are they trying to go in the long term and how are they hunting the stops of the early traders to just frustrate them and mess up their trades. Okay? All right. So this is the day before yesterday concept of stop hunts. Some days is very clear, like this one. This one was too sweet. Very sweet trade. Candle number one, candle number two, candle number three. That's the high. That's the break of structure. That's the retest into day one. And then what did you do? Boom. Very nice, very sweet, no stories. They continued it again. Further down with this. If this is candle number one, candle number two, and this is the high of candle number one, yes or no? This is the breakout on candle number two, yes or no? This is the retest on candle number three. What did they do next? Boom, you catch this. Yes or no? So some days it's clear like that. Okay, so they are supposed to continue it now, Abi. So this will now be candle number one, candle number two, and this will be candle number three. So when price got into the body of candle number three, what should have happened? Yes or no? But they didn't do that. Rather, what did they do? They took it all the way down, frustrated all these buyers on day two. If you have not taken your profit, you are now in a loss. Just imagine what happened to your psychology. Very, very upsetting thing. So after they have hunted all their stops and frustrated all of them, what did they now do? This is now the low of candle number one, yes or no? So you can see now, Abi. So now, this is now the breakout, Abi. And then we now may see a retest into this, and then for it to now go down. Or if they don't do that, what will we see? That means they have achieved their cycle. They have, oh, that's even what, I didn't even know that we had come here. Is that not what they did? And then they now brought it all the way down. So they have achieved their objective with these guys. They have frustrated them and made money on their head. Yes or no? Then now, they are now ready to start a new cycle. Candle number one, candle number two, which is the breakout. So we may now see a return into this for candle number three. Then what will now happen? Boom, all the way down. Does this make sense? It's not as clear cut as the other ones that is very straightforward. That's why you see trading naked price without indicators. It's not exactly easy like that. But understand the premise. Candle number one is the level we are looking at, that the early buyer started buying from. Candle number 2 is the breakout. Candle number 3 is the retest that should not pass the low of candle number 1. If it passes the low, they just wanted to frustrate everybody that traded on day 2 and on day 3. Yes, and day 1 too, yes. But we are not trading day 1. We wanted to catch the extension on day 3. So yes, they will frustrate day 1, frustrate day 2, and frustrate day 3. They now start another cycle to the downside. You now look and say this thing is a scam. Okay, so it's something that we just noticed after a while that what's going on? What's going on? Before we now realized what they were trying to do. Okay, do you understand this, my people? Is it clear or is it not clear? Is it clear? Now, if you notice something, this day before yesterday concept, if you check it out on the higher time frame, it is simply that trend continuation pattern that I taught you, where you will see a sharp candle, a stopper, and a continuation. That's all. How do I mean? Look at this. Is this not the move up? Is this not the stopper? Abi? Is this not price coming back into this place? And this place should do what? Hold and then go. But rather it came below the low of the stopper. And that became the new level for it to go down, which is actually also a trend continuation on this side. Because this is the move down, this is the stopper, and this is the continuation pattern. Does that make sense? All right. Okay. Thank you very much. So write down all these chart patterns and entry patterns. We have 3 entry patterns. One on the 1 minute, which is the stochastic cross from 85 to 15 if selling, and from 15 to 85 if buying. The second one is on the 5 minutes or 3 minutes, morning star, evening star, but we will call it stopper shocker, which is a limit. Sorry, the second one is the 5 minutes or 3 minutes support and resistance, break and retest, where in a downtrend, price will turn previous support into present resistance. The third one is the 5 minute stopper shocker or order block, morning star and evening star, where you don't have to be there present, just set your pending orders and walk away. 2,500 points as your stop loss, 7,500 points as your take profit. After explaining that, I now said that there are some chart patterns. They are not for entries, but they just show how price behaves. And that's the trend continuation on the 1 minute, right? Where you see the big sell candle, the stopper, and a continuation pattern. And that same phenomenon, when you now take it to the higher time frame, remember I told you that this is the pattern now. Candle number 1, candle number 2, Abi, and candle number 3 on the 1 minute. How that this is a trend continuation pattern and price should not be able to go above this high, rather it should continue selling. This trend continuation pattern is exactly day before yesterday concept on the daily time frame. What you see on the 1 minute is still what you see on the daily time frame. The only difference now is we now look at it like day before yesterday, candle number 1, candle number 2, and candle number 3. The exact same thing, but on the daily time frame, where every candle is 1 day. The same phenomenon. When you see it on 1 minute, it's a trend continuation pattern. When you see it on daily time frame, understand what they are trying to do. They are trying to hunt the stops of all the early buyers. Does that make sense? So these are their stops here of the early buyers on the daily. So they will have thought it's going to reverse and do morning star. So when you think it's going to do monitor, what do you do? Boom, to frustrate all of you. And this now becomes candle number. So this will come here, and what will now happen? Come down. This will now become candle number 1, candle number 2, and 3. Thank you. So it's the same thing, but on different time frames. One is on the 1 minute to know that your trend will continue. The other is on the daily time frame to know that they're trying to frustrate all the early buyers that bought yesterday and bought day before yesterday. These are the concepts you need and should practice. When you practice them long enough, then you have a clear idea of what you are looking for. So go and check out these concepts on the higher time on your chart and backtest them and put the examples inside the group chat on Telegram. And then tomorrow we'll just be analyzing, bringing it all together, answering your questions, looking at money management. Then I'll teach you a bonus strategy for Forex. And then we take it from there. The rest of the interaction will be inside the Telegram group. All right, so do we have any other question that we may have to ask? If not, it's 2 o'clock and we've come to the end of today's class. We've come to the end of today's class. All right, then. See you tomorrow by 10. Cheers and God bless everyone. The recordings will be made available latest by next week. And already that's the recording of this particular class, but we already have the pre-recorded videos on the LMS. So please go and make use of it, dear. Cheers and God bless.